This number cost someone $240,000. 32,000, 8,000. Same income. If you don't understand this in the next 10 seconds, it's you. You're already one of them. You just don't know which. And by April, one of these two numbers lands on your tax return. Not because of how much you made, because of something you did or didn't do about 9 months earlier. Two people, identical paycheck, 100 grand. One hands the IRS 32,000, the other hands over 8. Not evasion, not offshore, not a rich uncle, not a loophole. One line, one form, one word. And most people go their entire working lives without ever seeing it. I'm Moj. 40 years I've watched this play out. Smart people get rich. Hard-working people stay broke. Same hours, same skills, different numbers at the bottom of the form. Every time, every single time. It came down to one thing. One of them read the menu. The other one didn't even know there was a menu. Stop for a second. You're sitting there thinking my taxes are normal. Everyone I know pays about the same. That's the trap. Everyone you know is in the same room as you. The other room, where people pay 8 instead of 32, you don't get invited. You don't even know it exists. Until tonight. Before I show you the word, I need you to feel something. Your last paycheck. The gross number. The net number. The gap between them. Most of that gap isn't tax you owed. Most of it is a tip. You heard me. A tip, every 2 weeks, to the IRS. For service you never received, never asked for, and never agreed to pay. Over a working life, 30, 40 years, a middle-class earner tips the IRS somewhere between $200,000 and $600,000 they never owed in the first place. Not evaded. Never owed. You paid it because nobody told you the word that makes it optional. And the word isn't hidden. It's not complicated. It's been printed in the tax code for decades. You pay 32 instead of 8 because of one word. And that word is employee. That's it. That's the whole thing. Wait. Don't skip ahead. Don't close this. Because I already know what you just thought. Great. So I have to quit my job and start a business. No, you don't. And that's the trick most people never figure out, even when somebody tries to explain it. Let me show you what the second person did. Same work, same 100 grand, same clients. She's not a W-2. Pause. She's something else. Pause. She pays herself a salary. A real one. Reasonable. On the books. Pause. But not the whole 100,000, only part of it. Pause. The rest comes to her a different way. And that one structural choice, just that, saves her $6,000 before she does anything else. There's a name for this structure. Pause. Almost nobody uses it. Pause. It's called an S corporation. Write it down. We're coming back to it. But listen to me carefully. That's 6,000. That's layer 1. Layer 1 is the easy part. If you stop there, you're still overpaying. You're still in the expensive room. You just move to a slightly cheaper seat. The real jump, 32 down to 8, that doesn't happen at layer 1. It happens when you stack layer 1 with what comes next. And what comes next is money. Money lying on the floor of your own life. Money you could have picked up every year for the last decade. Money that's still there, right now. Waiting. You don't see it. Because nobody ever pointed at the floor. Let me point. There's an account where money goes in tax-free, grows tax-free, and comes out tax-free. It's the only one in America that does all three. Most people who qualify for it never open one. That's $40,000 quietly gone over a decade. You took a course last year to level up at work. 2,000 back. You were allowed to claim it. You didn't. You paid student loan interest. 2,500. You were allowed. You didn't. You had daycare so you could keep your job. Thousands more. You didn't. Medical expenses over a certain threshold. Charitable giving if you itemize. State and local taxes up to the cap. Mortgage interest. I could keep going. Your eyes would glaze. You'd click away. So I'll stop. And I'll just tell you the damage. The average middle-class household in this country leaves $3,000 to $6,000 on the table every year in deductions and credits they qualified for and never claimed. Every year. 20 years of that. Up to $120,000. Gone. You didn't spend it. You didn't lose it in the market. You just didn't ask for it. Stop. This is the point where most people click away. And this is where they lose the most money. Because what comes next is the biggest mistake of the whole game. The one that's cost more Americans more money than all the others combined. There are two retirement buckets. You've heard the names. Roth and traditional. You probably have one of them right now. And there's a very good chance it's the wrong one. Here's the game. Traditional. Money in before tax grows untaxed. You pay tax when you pull it out in retirement. Roth, money in after tax grows untaxed. You pull it out completely tax-free. Forever. One question decides everything. Just one. Pause. Is your tax rate higher now or higher in retirement? That's it. That's the question. Most people never ask it. They pick whichever bucket their co-worker mentioned over lunch. They pick wrong. 30 years old, making $55,000 early career. Picked traditional because it gave you a deduction today? Wrong bucket. You just locked in a small deduction at 12%. In 20 years, when you're making $250, you'll pay the tax at 32. You traded a dime today for a quarter tomorrow. 45, peak earning, making $280. Picked Roth because somebody said tax-free is always better? Wrong bucket. You just paid 32 cents on the dollar for money you'll pull out at 12. One question, one answer. Over a working career? $200,000. Minimum. Sometimes $500,000. One question most people never even think to ask. And here's where I'm going to stop being polite. If you've made it this far into the video, you now know more than 90% of American taxpayers will ever know. Which means something changed about 30 seconds ago. Up until now, if you overpaid, it was ignorance, forgivable. From this point forward, if you overpay, it's not ignorance anymore. It's a choice. You're choosing to tip the IRS. That's a different thing. That's the thing your future self will never forgive you for. Now, let me tell you a story. A guy came to me, call him David, software engineer, W2. $160,000 a year, TurboTax every April, paying 42 grand in tax, clean, honest, not hiding a dime. We sat down. One afternoon, that was it. He went to his employer the next week, asked to be paid as a 1099 contractor. They said yes. They saved money too. He formed an LLC, elected S-Corp, salary plus distribution, solo 401k, HSA, mileage log. Year 1, 42 down to 15. Year 5, $135,000 saved. Year 10, over $270,000, same laptop, same desk, same code. And when he told me about it, he said something I'll never forget. I spent my whole life thinking tax planning was what rich people do. Turns out, it's what makes you rich. Let that one land. Tax planning isn't what rich people do. It's what makes them rich. Now, 30 days. 5 moves. That's all. And listen carefully, because here's the rule most people break. If you don't do move 1 tonight, you won't do any of them. Not this month, not this year. Never. I've watched this happen 1,000 times. The person who acts in the first 24 hours acts. The person who says this weekend doesn't. Ever. So move 1 tonight. Open last year's tax return. Find line 24, total tax. Read the number out loud, until it's real, until you can't unsee it. That's tonight. Then, decide your structure this week. W-2 locked in, ask about 1099. Self-employed? Look at LLC with S-Corp election. 10-minute call with any CPA answers it. Open the accounts next week. Roth. Traditional. HSA if you qualify. Solo 401k if you're self-employed, 10 minutes each. Fund each one with $10 just to get it open. Pull receipts the week after. Medical, education, childcare, donations, business expenses. You have 3 years to amend a return. 3 years of refunds still sitting there waiting for you. And then a calendar reminder. Every January 1st. Forever. This only works if you repeat it. Skip 1 year, lose thousands. The IRS won't remind you. Your employer won't remind you. Nobody will. That's the point. That's the plan. 5 moves, 30 days, 20, 30, 40,000 a year. Back in your life. Now look at me. Everything I just showed you is layer 1. Layer 1, there's a layer 2. Real estate depreciation. The qualified business income deduction stacked correctly. Opportunity zones, trusts, state residency for remote workers. Charitable vehicles that pay you back. Layer 2 isn't where you save 20,000. Layer 2 is where you save 100. 200. But here's what nobody tells you. Layer 2 doesn't break beginners. It breaks the people who did layer 1 and got comfortable. The ones who optimize once. Feel smart. Stop reading. 5 years later, they wake up and realize they left 6 figures on the table, on top of everything they already saved. Those are the most expensive mistakes in this entire game. Next video, I'm walking through them one by one. With numbers. The 3 mistakes that cost the most, and how to avoid them. Skip it. You plateau at layer 1 forever. Subscribe so it lands in your feed first. And now, the last thing. You know the difference between 32,000 and 8,000. You've known it for about 9 minutes. You can't unknow it. Next April, your tax return won't show your income. It'll show your decisions. And you're about to make one of 2. Choice 1. You close this video. Great info, you say. Life gets busy. You don't open that return tonight. Next April, you pay 32 again. And that won't be ignorance anymore. It'll be a choice. Filed, signed, and dated by you. Choice 2. Tonight? Right now. You open last year's return. You find line 24. You look at the number, and then you come back here to the comments, and you type just that number. Nothing else. No excuse. No explanation. Just the number. Small move. But it's the exact move that separates the person who gets $20,000 back next April from the person who, 10 years from now, stares at a house they can't afford and says, "I knew." Your future self is watching you right now. And the person deciding which version you become, it's not me. It's you. 5 minutes after this video ends, make him angry about your haircut. Not about the $250,000 you quietly tipped the IRS, because it was easier than reading one form. Moi, she has spoken. Your move